Let's talk economic forecasting. Let's talk Great Britain. Let's talk Brexit. Here it comes. Okay, I'm going to talk about my economic forecasting for a minute. You know, it reminds me of looking at a plant, say a rose bush, and for me, you look at the buds coming out and you see a little tiny bud developing. It's so small nobody else can see it. And you say, hey, you know what? I think there's going to be a flower on that rose bush right there, right? You come back a week later and all of a sudden, for no reason, that bug withers off. Now you have to change your prediction. And this is the way with predicting economic trends. Sometimes things come up. You have to change and you have to make a new economic prediction based on the new reality of what's actually happening. And you have to keep your eye on it. But you can have a certain amount of success. And I think I have a pretty good track record of my success of predicting the outcome of economic events. Now what we're going to talk about is Brexit. And we're going to talk about the implications that this might have. At this moment in time, what I see as the most likely outcome is a hard Brexit. They're not really coming up with nothing. The boys in Brussels are digging their heels in, and they're saying, we don't want to renegotiate anything. We just want... Well, you got to understand they have a motive. I do not personally believe that Brussels actually wants other countries to have a referendum and leave the European Union too. Okay? So what's the best way for them to prevent this? Think about it for a minute. Okay? So Britain right now is heading toward a hard Brexit. And they're heading toward this cliff with nothing, no real plan in place to stop it. And it's coming on March 29th. From what I understand, the only way they can possibly get out of this is if all the other EU countries, to delay it, they'd need the signature, I guess, sign off of all the other, I think it's 27 other countries they'd need to have sign off that they can delay this. And so we're heading right for it on March 29th. And what's going to be the outcome if it actually happens? If Britain actually has a hard exit from the EU? Well, it's a very complicated situation, but it's going to have a very profound effect on the financial markets. And this effect would be an effect that would tend to trend toward deflation. And it would tend to trend toward a market drop-off in the markets. It could be quite a steep correction. It could be the markets could actually plunge. When it actually happens, a hard Brexit. Now we've got an awful lot of other things happening simultaneously. One of the things is they've been buoying and supporting the Italian bonds. This is because Germany and France are heavily invested in Italian bonds. So what they're doing is they're doubling down. They're actually buying more, rather than see these bond prices rise. If they rose past, say, 7%. On the average, and of course, when troubles come like that, the yield curve starts to flatten out on the Italian bonds. The Italian bonds, if they rise over a 7%, then Italy would start to get into a position where they can't fund these banks anymore, and that could absolutely explode and tear the European Union apart. So Germany and France have to continue to keep buying these worthless bonds. They're basically worthless, but they're only worth something because France and Germany's banks are buying them. Okay, and this puts banks in France and Germany in a more jeopardous position. And so we can see already the automakers in Great Britain are suffering from this, what we're headed toward. The world's markets, when this actually occurs, now there's a lot of talk, but the world's markets right now are being buoyed on the Fed, believing that the Fed is going to back off the pedal on their programs that they got going. But they haven't done that yet. They haven't actually backed off. If the Fed backs off of these programs, really backs off of these programs, for real, cuts back, say, on their quantitative tightening, right now they're $50 billion a month, you have to understand that the Fed's going to continue to pull that $50 billion a month out of the general economy. That money, this is destruction of capital. They're going to continue to do this until they're forced to stop. The Brexit could very well force them to stop. And if that happens, think about gold and silver. Look at what's happened with gold and silver just on the talk of the Fed cutting back on these programs. Gold and silver's changed. Silver and gold moving up in price. Cryptocurrency hasn't reflected in cryptocurrency as of yet. Cryptocurrency is expanding out its user base. It's becoming more and more synced in, I'll call it. More and more, it's becoming ready for worldwide adoption, more and more all the time. But it's not there yet. It's working toward that point. And it's what it's looking like to me is that Bitcoin is going to be in the end, the final result is going to be more of a store of value than it is an actual currency that people use on a day-to-day basis. Now, there's other coins that are in the position to be more of a currency used on a day-to-day basis, more so than Bitcoin. But Bitcoin looks like it's going to continue to be the big one, the one that's the mover and shaker, moves the market up and moves the market down in cryptocurrencies. It's basically what it's forming into is digital version of gold that can be sent around the world instantaneously. And it's trying to steal the limelight away from gold as a store of value, as the ultimate safe haven asset. We're going to have to watch that very carefully and see what happens. But gold's always going to be precious, and it's going to be a method by which you can retain your purchasing power. Whereas the fiat currencies are going to become more and more unstable, more and more instability in the fiat currencies. So now, getting back to Brexit, what I think is probably the most likely outcome is that they will have a hard Brexit. I don't, at this point, I don't see anything in there that looks like it's going to change that yet. We're heading right toward it. So what's going to be the effects for Great Britain when that happens? Well, what I see is Great Britain going into a depression. Not good. An actual depression, which could actually cause an awful lot of unrest in the country, where people are upset and more and more than it is right now, even, and cause unrest in the country and people gathering together with posters and placards and everything else, and upset at what the economy's doing and upset with what the government's done. Maybe we need Winston Churchill. I'm just joking. But I mean, what is this going on? And so the effect on the world markets is going to be probably a plunge. Now, that immediately will have an effect on the Fed. The Federal Reserve is probably going to have to, at that point in time, really back off the pedal on quantitative tightening. If they do that, it means that the dollar is going to start to lose value rather rapidly. And it also means that gold, silver, and really at that point in time, when that actually happens, we're probably going to see cryptocurrencies pop too, along with gold and silver. They're all going to go up. Everything that's divested from the dollar, which will be going down. I don't see it as immediately causing a hyperinflation. No. But I do see the dollar going down, descending back down into the 80s, low 80s, maybe even 70s, if it's really bad, after the Fed relents and the Fed says, okay, we're going to stop quantitative tightening. And in fact, there is a possibility, if this is bad enough, that it could actually push the Fed into a new round of quantitative easing and actually lowering interest rates again. This is what actually could happen if this is bad enough, if the situation is bad enough, in order to maintain the markets at that point in time. And of course, the markets then would, again, they would go back up again if the Fed does that, if they go into a new round of quantitative easing. In fact, for the markets, the sky is the limit. And the same thing with gold and silver and also with cryptocurrencies. If the Fed changes monetary policy. But the dollar, she could take an awful pounding, especially due to the fact that, like Europe now, because of the situation in Iran and these, they're to bypass what the United States has done, they're setting up their own means of exchange of currency that bypasses the SWIFT system. And the Chinese are doing the same. This is all erosion to the dollar, like the yuan for oil futures contracts that China did a while back, where they're selling oil in not denominated U.S. dollars. This is all eroding the petrodollar. The petrodollar's been under erosion for an awful long period of time now, and it's a very slow process. But you got to understand, toward the end of that process, it speeds up. And the world doesn't have to use, in the end, U.S. dollars as the only way of buying and selling oil. And because the petrodollar has been the foundation of what's kept the dollar as the world reserve currency, we could actually move into a period in time where the world reserve currency status of the dollar is in jeopardy. So you might ask yourself, well, what would step in to replace it? Well, there's nothing out there right now that's qualified. The dollar is the only game in town right now, right at this moment in time. And so now I'm going to go out on a limb here a little bit. I see something that has the potential to replace the dollar as the world reserve currency. It does have the potential. It could do it. But it's right now, it's not even looked at as a candidate. But in my mind, it does have the potential where it could do it. And this is Bitcoin. And I know it sounds ridiculous, sounds absolutely ridiculous, but if the dollar steps down and there's nothing else in the world to take its place, this is a potential situation where it opens the door up for something that is completely out of the box. Completely out of the box, the idea of a Bitcoin as a world reserve currency. But look back a little bit and remember when Bitcoin and its fellow coins, altcoins, went up to almost $1 trillion in market capital? If you don't see potential there, then you're missing something. This is something that could come out of nowhere, like a contender for the dollar, is the way I see it. So anyway, that's possibly an argument that a lot of people out there would look at me and say, hey, you know what? Get real. Bitcoin is a world reserve currency. Get real, But, okay, I have to look to the future and I have to see things that are positioning themselves. And I don't see any other currency in the world that's positioning itself that has the potential. The yuan doesn't have the potential to become the world reserve currency. Even if they backed it with gold, I don't even see it happening then. You name some other currency. There's nothing out there. The dollar's the only game in town. And if the dollar all of a sudden just, starts to get into a big amount of trouble, okay, I'm not going to preach that argument anymore. I've said it. I'm going to talk about the chaos that could come to Britain, if this actually happens. And the chaos would come from the fact that Britain would enter into an economic depression. which way would the pound go in this situation? Well, I would think that the British would have to fight this economic depression, would probably have to resort to a monetary stimulus of some form or another to fight it, and this would have an inflationary effect on the pound. That's what I would think would happen, but I'm not sure yet. But this is the outcome that I think would happen is inflation, profound inflation in Great Britain. And this would make it harder for the British people to survive, harder for the middle class. Their savings would be eroded. So this is the way I see it. Listen, thank you guys for listening. Like and subscribe. And I really appreciate the support from my channel over the last few weeks, you know. This is really, I'm very grateful to you guys. Well, bye-bye for now.